Yo, party people united. It's your boy Nico here. Welcome back to another epic episode of the Small Axe Podcast. This is where I share everything that I know about buying buildings and building empires. So, today I wanted to talk to you about something that I think a lot of you really need to hear, especially if you're trying to get your first deal done today. And I'm just going to say it straight up. Your first multifamily deal is probably not going to cash flow. And that's not me just being negative Nancy or duty booty. That's me being straight honest with you guys because I see a lot of people getting stuck right now, spinning their wheels, underwriting deal after deal, saying this deal doesn't work, this deal doesn't work, this one doesn't pencil, nothing works today. And it's the truth. Nothing works. But you think that there's just something wrong with the deal when in reality, your expectations about multifamily just might be off. So let's talk about what you've probably been told. You buy a deal, you put 20% down, maybe you raise some money or you have some money. You put tenants in there that are paying down your mortgage, they're paying the rent, they're paying down the bills, and boom, cash flow. That might have been true in certain markets and certain times, but that's not necessarily the game today in the majority of the markets that I look at and that I know other people are looking at. So, right now, we all understand that we all should know that debt is expensive. Yes, historically, we are at an average of around 6% or so for debt. And yes, that's average. But 4 years ago, 5 years ago, it was crazy cheap. But today it's not the case. It's up 5 points from then. So it is technically expensive in those terms, 5 years ago's terms. But historically, it's average. So we should be okay operating. But there's other things that are involved here too that are causing deals to not cash flow. Insurance is up, taxes are up, all expenses across the board, utilities, energy, everything is up. Maintenance costs are up because people need to get paid more. Rents are not exploding the way they were a couple of years ago. And as a matter of fact, they are either flat or declining in the majority of markets that I know today. So when you sit there and you're doing your underwriting and you plug your numbers into a deal, yeah, it's tight. Sometimes it's really tight or negative, even at your preferred price point. So don't ever get involved in a deal that is negative cash flow when you punch in all the numbers and you do your full pro forma on my multifamily deal analyzer, the deal blade. If it is cash flow negative, you have to drop the price. Okay. And that's okay. You should be dropping the price today. You're allowed to buy at a discount. You're allowed to buy it something that's going to make sense for you. Remember, you don't want to take over somebody's headache only to be in a headache yourself as well and then be potentially a distressed seller yourself. The objective when buying a property is to take over something that's going to do good for you. It's going to provide you with some cash flow. People are going to be paying down the mortgage, paying the utilities, paying all the bills to keep the property maintained, along with hopefully allowing you to put some reserves away for future capex expenses. And here's the problem, people get stuck here. They say, well, if it doesn't cash flow, I'm not buying it. And you should be like that. And my first mentors, Jake and Gino, these guys were epic. And they would say, if it don't cash flow, let the grass grow, meaning just leave it, don't touch it. So what happens next? Well, you're not buying anything. It's the case for me too. Sometimes it takes a year or more to find a deal that will work or to find a deal that I'm aggressive enough or in the position ready to buy. But here's the catch. If you're not buying anything, you're not learning the game and you're not leveling up and you're not getting to where you need to be to learn the game. Because reading about deals does not make you an investor. Buying buildings does. Now, let me be clear. Obviously, I'm not telling you to go out there and buy bad deals. I never want anybody to buy bad deals. It is not cool. I'm not saying that you should ignore the numbers or get yourself into something that's going to bury you. I have to be clear on that. What I am saying, though, is that you need to understand what a good deal actually looks like in today's market. And a lot of times, that doesn't mean that you're going to have strong cash flow on day one. Most of the times, you're going to be breaking even or just scraping by. Yeah, everybody's like, oh, I'm only going to buy a deal that's cash flowing day one. Well, to cash flow a property day one is difficult, not impossible, but difficult. And a good deal today might look more like this. You're buying at a discount. Price matters, guys. It is really important to buy at a price that works for you. Who cares if you're 50% of the asking price? Make that offer either through an LOI or a verbal offer or a text offer to the broker. Make the offer. The worst that they can say is no. Who cares that you are a low baller? I don't care. People call me a low baller, but you know what? I have 6 deals under my belt right now. And people used to be overpaying in 2021 and 2022. I saw it and I missed out on deals because of it. But honestly, I'm glad I missed those deals because people paid too much and now they're stuck. Here's another thing you should look for when you're buying a deal. You should look for room for improvement on operations rather than capex improvements. You don't want to have to go spend money. You want to go change the way the property is operated. Maybe they don't have a property manager. Maybe they're just operating poorly. Maybe they're mom and pop. Maybe they're using antiquated systems. All of that is good because in this case, you don't have to necessarily spend money or much money to go in there and rehab or renovate or put a new roof or fix a foundation or anything crazy. You're just going in there to change the systems and processes and operations. Now, I will tell you on this side of things, you also have to be very careful. You can't be overly optimistic in today's environment because I've found that renting the apartments today is challenging. In the 6 years that I've been owning and operating, I've never seen this many challenges with getting units leased up. So, what are we doing? Essentially, we're pivoting to drop rents. And you might have to do so too. So, if you're looking at a rent roll or a T12, analyze the T12 carefully because the T12 will tell you the month over month income that the property is getting. And if something looks off, it's probably fitting the norm of the broader market where everybody's experiencing either rent flatness, rent declines, or challenges with occupancy, or all of the above. Now, you might be able to get some rent upside. Yes. It might not happen overnight, though. It might take 3 years for rent increases to come back. That being said, a property that you're looking at might be well under market value for rent, and that is valid. So, yes, you can technically go in there, change the tenant or just up the rent sometimes, depending on how much of a bump you're looking for. And that is valid. But you have to take caution because you really have to know what market rents are today. And if you do not know what market rents are today, you have to talk to people, talk to multiple property managers, do a rent survey where you're calling different owners and operators in the immediate area within a mile or so and see what they're getting for rents and go look at the properties, see if they're actual valid comps. Use Rentometer, use CoStar, use anything you can to really figure out what the market rate is. Because yes, market rate might be $1,000 and somebody might be only charging 800 and they have 100% occupancy. Okay, that's great. So maybe there's some sweet spot in between there. Maybe you can push the rents to 900 and still maintain that 100% occupancy. You'll figure it out. But the point is this, rent is not necessarily increasing today in the broader United States. Okay. So just be careful with that. And here's another tip for when you can spot a good deal. If you are underwriting and you're cash flowing off your pro forma for year one and it's showing 2-3%, guys, that is a win in my opinion. As long as you punched in the numbers correctly and you're doing everything right, that would be a win. And here's the thing, you don't want to be negative. You don't want to be just barely scraping by, especially for the coming years. And you don't want the cash flow to rely on rent increases. That's a crucial point as well. Because if you're relying on rent increases, I am telling you right now, if nobody has told you, I am telling you right now that it is very difficult to raise rents. All that being said, we have gotten some good rent increases from lease renewals. For example, when we took over our 44 unit property in 2022, we were charging $12.49 for 2 beds, and then we went up to $13.49, and then up to $14.25, I believe, is where we stopped. But we just signed a lease renewal for $14.35 plus $65 in bill back, so we are getting $1,500 on at least one unit in our 44 unit apartment complex. But again, our listings now, we're listing the vacant units at essentially $12.99, I believe. So we're way off where we should be and where we were a few years ago. And it's just the way it is. It's just the way the market is. So if you don't have to refinance or you don't have to sell and you're able to make the property cash flow at a reasonable rental rate, then you're good. And I want you guys to buy something carefully. I don't want you to get into a headache. I don't want you to get into a distressed situation. I want you to get something. And if it's your first deal, I highly recommend that you don't use other people's money. You take the risk yourself. And here, if you can get a deal today, you are in the game. You'll be able to control the asset. You will be building experience. You will be building relationships, credibility with brokers, and so much more. You will learn so much if you can get into a deal today. Because come 3 years from now, after this pain is all done, you will have cut your teeth and you will have grinded through the most challenging market that I have seen. And all of that matters more than squeezing out a couple $100 in year one. So you got to understand that cash flow is important, but it's a security and safety net. You're not going to live off cash flow. I guarantee it. If you're buying a fourplex, a sixplex, a tenplex, and you're getting 1 to 2% in cash flow, you're not living off of that. And in all honesty, you should be stashing that away for a future date because CapEx challenges are always going to be there. So let me ask you something. What is more valuable to you? Making $100, $200 a month, or owning a 10 unit, a 20 unit, a 30 unit property that you can improve, refinance, and hold for the next 5 years or so? Most people are playing way too small. They're thinking, like, I need this deal to pay me right now. Instead of thinking, I need to get in the game and build something and get my career and my journey and my pathway going, because that's more important, in my opinion. And I get it. A lot of you are coming from single family, or you've been listening to content where people talk about passive income and quitting your job. And that's fine, but that's not how this starts. It'll be very thin and very tight. All of the operators that I talk to get limited or no cash flow right now. And it's okay. This is just how it starts, guys. This starts with doing deals that make sense long term, not just day one. Multifamily is a long game. I will say it a billion times. I don't care. Multifamily is a long game. And I'll tell you from experience now, the people who win in this game are not the ones waiting for those perfect deals. They're out there, they're understanding the market, they're adjusting their expectations and executing on deals that make sense for them. They get creative, they structure deals differently, they find ways to add value, they operate better than the next guy. That's where the real opportunity lies, not in some perfectly clean, perfectly cash flowing 10% cash on cash, which is nonsense anyway, deal that everybody and their mother are chasing. If there's a deal out there with 10, 20% cash on cash, number one, it's a lie. And number two, somebody would have bought it already and somebody would have overpaid to make that property a 4% cash on cash. I promise you guys, there's no diamond in the rough sitting out there. It is so rare to find that unicorn that is going to cash flow even 8% in today's environment. I promise you, if you can get something to cash flow 2, 3, 4% year one, that is a huge win. And here's the other piece that nobody talks about. So back to what I was saying before, if a deal does cash flow day one, 5, 10%, you're not the only one seeing this. This means that there's going to be a ton of competition. The price is going to get pushed up, or something is wrong with it and something's being missed. So be careful. So if you're sitting there right now, underwriting deals, getting frustrated, just like me, I want you to shift your mindset a little bit. Instead of asking, does this deal cash flow and give me 8% today? Start asking, does this deal make sense for the next 5 years? What is the market gonna look like in 3 to 5 years from now? And where will I be if I own this cash flow or not in the next 5 years? Am I buying at a good basis? Do I understand value historically and what it could be like potentially? Can I operate this better than the person that's currently owning and operating it? Is there a path to growth? Because this is a long game. And the sooner you accept that, the sooner you stop sitting on the sidelines and getting involved into this awesome game. And I will leave you with this. If you need your first deal to pay you, you're probably not ready for this business. If you're willing to learn, though, learn how to operate, learn how to think long term, then there are deals out there for you today that can change your life. Not overnight, but over time. All right, guys, and that is it. That's all I got for you today. Now, before I leave you, though, I want two things. I want you to go to Apple Podcast, subscribe, leave a rating, write a review, and share this podcast with somebody that you think could get value from it. I also want you to go to my Stan store, stan.store/buy buildings. Here, you're going to find a multitude of beautiful resources, some free, some paid, to help you start your journey in multifamily or continue or improve your journey in multifamily. I teach people how to buy buildings. You can learn with me. I'm opening up a new cohort very soon for the multifamily machine, and it is incredibly epic. I promise you guys, there is nothing like what I offer on the market today. I promise. So go there right now, stan.store/buy buildings, sign up for the multifamily machine. I will give you a big kiss, and let's rock, let's roll.